Hey, good morning. This morning I want to talk to you about profitability, about sprinting to profitability. We're going to talk about steps for your center, for your new center, or maybe your current center, and how to make it profitable. This is a lot about strategy, philosophy. There's a lot that goes into making sure that your center is going to be successful and profitable. Boy, the cars are loud this morning, aren't they? I knew it was going to get busy. Told you it might get crazy. Nah, I don't know. No. Nope. Come follow me. Then this is the channel for you.
You go. It's pretty cool, huh?
Do not be ashamed of profitability, because a profitable program can do amazing things for its staff, for its families and communities, more so than one that's struggling. More importantly, if you can make your center profitable, you can be around for a long time, because when we're not profitable, we're frustrated. So let's get profitable. Let's dive in this morning and talk about how you can turn your business around, make it more successful than you've ever imagined. One of the biggest parts of your business plan is going to be money, and figuring out how to manage money, how to raise money, how to charge your families, how to do all of the things that are so important to keep your business afloat. This morning I'm in downtown Fruita in Circle Park, and I've got the bank in my background because they are a critical financial partner to us. It's going to be a little bit noisy, it might get a little bit crazy, but we're going to dive into money today and how to help you be successful and profitable in your business. There is no shame in being profitable in childcare, because a profitable childcare center can be a great partner for your community. You can do more with more and impact your community, your families, your staff, your children. You can give back financially to others that are struggling when you are profitable. So we're going to dive into profitability today. One of the biggest keys for being profitable is making sure you've got a sound plan and strategy when it comes to tuition policies, raising money, and following through with managing your cash flow. I want to remind you, when it comes to marketing, that your parents early on are your biggest marketers. They're your biggest advertisers. And so working with your parents, creating a phenomenal experience for their children, that's what's going to grow your program. So early on, sprinting to profitability, make sure you've got your website dialed in. Make sure you've got your Facebook, your Instagram, whatever platforms you're going to use. Get reviews from your early on parents. Get reviews from previous families that you've babysat for business partners, anybody you've been in business with, character references. Have them put reviews on your site, because people are searching, and to have a solid credential, to have a great background, references, that's really important. They're going to drive families to your program, and those families are going to bring more families. Profitability and diversity go hand in hand. So when you consider what ages you're going to be caring for, I'm a big advocate of school-age programs. So location is important to that. Our first center was right next to, literally we share a gate and a fence with our local elementary school. So our school-age program was huge, because I was able to bring school-agers in early in the morning and send them to school, and then here comes my full-day kids, my preschool kids, and then some of those kids will leave and I can bring school-agers back at the end of the day. Stacking chairs, that's another video, make sure you watch that, talking about how to maximize the seating throughout your program. And one of our newest tools that's going to be dropped into our treasure box here in the next few weeks is our new premium roster with ROMs and revenue calculation. It'll literally help you plan and budget out daily, weekly, monthly, and annually how much revenue you're generating based on your current enrollment. All automated, all formula driven, and all you have to do is manage your classroom rosters. It is amazing. It'll calculate your private and self-pay families, as well as your CCAP or families that are on child care assistance. It'll take those percentages and drive those different rates, because you're going to have a different rate for your self-pay parents versus what you get from the county for those on child care assistance. And it's going to tell you not only how much you're making a day, a month, a year, it's going to show you how much you're losing every day, every month, every year, by having open seats in your program. So smart tools, we're making them smarter. Jump into the treasure box. I touched on this briefly in our previous episode, and I'll touch on it again. You've got to make sure you're charging a fair market rate, and I encourage you to continue to push that ceiling a little bit higher and a little bit higher each year. Do not be afraid to raise your rates. We've got a great rate tool in our treasure chest. Make sure you check that out. That'll help you figure out what the overall impact per month, per year, that a 50-cent or a dollar raise could mean for your facility. How and when you charge your parents is key. We have multiple billing options for our families. They can pay weekly, bi-weekly, monthly. They can pay on the 1st or the 15th. I want to accommodate our parents as much as I possibly can. You want to make sure you have a great, strong tuition policy. So our policy is this: we charge based on the child's schedule, not on attendance. It's important for us that we have our facility full, Monday through Friday, top to bottom. Our tuition policy is such that parents pay for the days they have their child scheduled. Now, some of the worst advice I ever got when we just started 16 years ago is do Monday through Friday. You don't want to mess around with part-time parents. It's a real pain, and the scheduling, this and that. It's the worst advice I've gotten, and I'm glad I didn't follow it. I have plenty of videos that talk about our enrollment strategies and Tetris, and let me tell you this, we try to meet the individual needs of our families as much as possible. I would much rather have, in many respects, not all, 6 or 7 families that occupy a classroom with 10 seats in it. Because let's say I've got a Monday, Wednesday, Friday family and a Tuesday, Thursday family, and then a couple of full times, and then a Monday, Tuesday, Wednesday, and then a Thursday, Friday family. Maybe that fills my classroom. If one family moves, my classroom doesn't fall apart, right? I can quickly refill. If the other thing is meeting the individual needs of your families is critical in that loyalty and longevity of them being in your program. Some programs are charging, let's say, 5 days a week no matter what, but they only need 4. If that family decides to enroll with you, they're probably and possibly only going to stay until they can find someone that'll charge them 4 days. I can't imagine charging a family 5 days a week for care they only need for 3. If I can accommodate their needs and partner with them with their work schedule, that is critical for longevity of them being in our program. Now, our parents pay whether their child attends or not on a day they have scheduled. So we consider this a tuition-based program. So when a parent enrolls Monday through Friday, they're going to be billed Monday through Friday, whether their child comes 5 days, 4, 3, 2, or even 1. So we have a tough and strict tuition policy on that, but it's critical for us to meet our financial obligations and to grow our business. There's programs that often will just charge on when a child attends, or they'll audit attendance at the end of the week and then bill in arrears. It's kind of like groceries. When you go to Walmart and you get your groceries, you have to pay for them before you get to take them home and eat them. In childcare, it's important that we have that commitment from our families, and so they pay for care before they use that service. We're accustomed to this. So often in our business, families are so caught up, business owners are so caught up in families' financial whereabouts, their financial needs, struggles, that they tend to modify their tuition policy either for individual families or for the whole center, and then you end up with a financial disaster. You've got to stay strong on your tuition policy. Here's the thing though as well, when you're financially successful, when your business is cash flow positive, you can do more for families. We have a hardship clause in our policy, and it says that if you have a financial hardship, see the director or owner. And if I have cash in the bank and some savings, I can afford to dip into that to help a family, some parents that are really struggling with their program. So I can also reach in there and help a staff member, let's say with a $500 housing allowance because they've had a financial struggle. We can do more for our families, our staff, and ultimately our community if we're running a financial feasible business. You can write a check for the local career center to sponsor their t-shirts every year for the parade. You can do things and recontribute back into the community. But if you're struggling, if you're paycheck to paycheck in your business and you're literally asking staff, hold on, can you deposit that on Monday, please? I've got to make sure, I get enough tuition in by Friday to cover payroll. This happens, but it doesn't have to. But you've got to work smart. We're going to cover this in many, many series on wicked smart ways that you can operate your business. Let's talk about raising money early on. I mentioned previously in episode 2 about pre-enrollment. Don't be afraid of pre-enrollment. Remember, you can get a financial commitment from a family, put that in the bank with a fully refundable, this is at the beginning of the startup in your business, so that you have that cash flow in there, for example, like payroll, okay? Here's another thing we did early on, is that some families really can afford you. Some families can over afford your program. So we would offer families a 5% discount for paying 6 months in advance. Be careful with this money because it's not yours until you've earned it, until you've provided those services. But instead of $500 a month, let's say they did 6 months, that's $3,000. Give them a 5% discount, and now you've raised, do the math, but you've raised that money over $2,000 in your account, and then they'll just use those services over the next 6 months. We've even done as much as a 10% discount for a year in advance. This is at a time where we're really just needing to raise some cash to be able to fund our program, meet payroll, pay off those credit cards that we just loaded up with all of your childcare supplies and those kind of food for your program. So think about that 6 months and year in advance if it's going to be beneficial, if it's critical for cash flow. Once we got to the point where we didn't need that extra cash up front, then we made those programs go away. We grandfathered some families in and let them ride that out for a few years. We thought that was pretty cool, and the cash flow that they provided us at critical times during the year was really helpful and really important. But make sure that you think about how much you need and how long you need that for, because that 5%, 10% discount is quite a bit. So you're paying a pretty good interest rate on that, but it's a great partnership, and you've got parents that are really committing to you long term. But just know, that's not your money until they've earned it, so keep that in mind. I really want you to create a plan where you're going to literally sprint to profitability. You've got to do that by working smart right out of the chute. So that tuition policy, really important. When you're also thinking about profitability in your program, you've got to really consider capacity. Both of our centers are set for about 75, well, not about, they are, and that's a pretty nice sweet spot for us. It's a comfortable spot. A program with 35, you've got to figure out what that break-even number is. How many children before you break even? Accepting tuition can be a challenge, can be a struggle. Remember before episode 1, I talked about being the collection department? That was me for years and years and years. You've got to be strict with your parents, loving, compassionate, but strict when it comes to tuition. Walmart does not allow you to put groceries on layaway. You can't make payments on a gallon of milk or a shopping cart of $200 in groceries. But in our business, we are notorious as childcare providers and owners of forgiving childcare or putting our families on a layaway program or financing their childcare for them. You really need to stay away from this as much as possible. I mean, 95% of your parents should be paying upfront cash or check without a credit card for care before services are provided. This is really critical. One of the best things we did when we opened up our second facility is we started doing automatic check handling. Through ProCare software, we use their service called Tuition Express. And this allowed for us to set up on a batch sweep, if you will, from their bank just into my bank and be able to draft that tuition. The fees scared me for a long time because I was told that I might be paying 1 or 1.5% of overall gross revenue in merchant fees. I work smarter on how to do that. I've got a video, we'll put it at the end of this clip here, about better ways to to handle tuition withdrawals. But one of the things is incentivizing your families to be able to set it up on automatic check handling through their checking account, not a credit card. So our families get $1 discount. Our rate, for example, is $37 for a 3-year-old in our program for a full day. However, if they set it up on automatic check handling with a checking account or savings, they get $1 off tuition a day. So that brings it down to 36. The reality is 36 is the price I need to be at. That's our current market value, and it's a lot lower than many markets. But that's where I needed to be, and it cost me only 75 cents to withdraw, whether it's $20 or $1,000 out of their checking account. Way better than paying 1 or 3% based on a credit card. If they want to get their Cabela's points or their flying miles, they can do that and set that up on a credit card, but I'm going to be able to recover that merchant fee by that extra $1 a day. And so we set it up as a discount for ACH, automatic check handling with a checking account. It's a great way to manage money, great way to process it. Our overall merchant fees is like less than 0.5%. And so very reasonable. Check with your bank. They may have a great program, even a better program than what we're doing. But think about how to handle those fees smartly, and don't just accept the merchant fees at 1 and 3% and think, oh, that's just a cost of doing business. There's smarter ways to be able to handle tuition. Good morning, son. We might just move here. Get ready for another shot. I'm going to find some shade. Your biggest expense is going to be payroll. Here's something I want you to do right away. I want you to talk to your local county, your workforce center. There is funds out there for paid internships and what they call OJT, or on-the-job training. And they may have different acronyms, different names for it in your state, in your county, in your program. Here in Mesa County, our workforce center has a great partnership with us for labor. What they want is they want to get skilled or semi-skilled workers into the workforce. So paid internships is a great way for you to get free staff for 2 and 3 months and get them into your program. These can be people that have worked in childcare before, but maybe you want to try them out for 3 months. You know, a paid internship can provide you with a staff member up to 29 hours a week. They must be part-time for insurance and other reasons, but they're getting paid through WIOA funds, federal work program funds. They often have to qualify through either some low income, or there's other critical things that could have happened to them, or situations in their life that they would allow them to be a part of this program. But partner with your workforce center, because again, sprinting to profitability is going to be also managing cash flow. It's not just about charging big rates and putting money in your account. It's managing the funds that you have. So check with your local workforce center and see if you can't partner with them to get some workers in your center without taking your payroll and taking it through the roof. Real quick, the OJT, that's on-the-job training, so that's a program that they can work 40 hours a week, still paid through these same types of funds. There's some different funnels of these funds that are going on, but this can be someone that, let's say they've worked in the program, they've worked in early childhood for, let's say, 4 or 5 years, and maybe they've taken some early childhood classes, and now they were working on their director certification. You could have an on-the-job training program for directors, someone that's a lead teacher now to be a director in the future. When a parent enrolls their child in their program, they're making a commitment to you. And I'm going to ask for a financial commitment. So we ask for the registration and first 2 weeks of care, minimum. But that's our standard way to enroll your child in our program. That's a non-refundable deposit. I don't want to take somebody's money unless they're committed. I'll hold a child spot for 2 weeks only prior to them starting, because I want to honor maybe a 2-week withdrawal from another center or program. So it's important to make sure you make that financial commitment up front, that they make that commitment. I talk about flexibility in meeting their needs. However, let's say you have a parent that needs care only every other week. They trade off on a parenting plan with their former spouse. That is a situation that when your program is full, you're probably not going to be able to accommodate that. However, when you're starting out, I'm going to suggest you make it really clear to your new parents that our policy is that we have to charge for the days that they're available. And we're not able to discount our rates by 50%, which would be the equivalent of a child coming every other week. However, if you're not full, take them. Take them and be flexible early on as you grow your program, and take those parents that are Monday through Friday every other week. Accept and enroll those children that are Monday, Tuesday, Wednesday this week, Wednesday, Thursday, Friday next week. And those nurse schedules, those firemen, police schedules, accommodate those. You're in the process of growing your business. Don't get too caught up in your strict policies early on if they're allowing you to cash flow and generate revenue, and you're doing more than that, you're generating families. Make sure you explain to them that this is an exception. I can do this as long as I can do this. So until I have to turn kids away every other week and put you in a situation where I'm only getting 50% of tuition, right? Because they're paying every other week. Until you get to that point, I would be very flexible in bringing as any child and any children you can. Let's touch on drop-ins. So drop-in care can be tricky, but it also can be profitable, especially early on when you have seats available in your class and in your program. So I would encourage you to have a good drop-in policy. Again, pay in advance. Pay in advance. You might decide, okay, they're going to use you for drop-in, so you're going to require maybe 5 days of tuition, and then they can drop in 1 here, 2 there, 3 the next week, and so on. But be really careful on charging in arrears. You want to make sure that commitment's up front. Nobody goes to the grocery store and gets to the shopping cart and say, oh, I forgot my checkbook. Can I pay you when I'm done eating dinner and groceries this week? It doesn't happen. You are a child care provider at heart and have been a teacher for years. You've got a huge heart, and oftentimes we tend to succumb to the needs of others financially. For some reason, we tend to just continue to give and give and give and give. But as a business owner, you've got to make sure you're meeting your financial needs for your business and for your staff. And remember this, one of the big mistakes a lot of centers do, and owners get into is they get in over their head too early. Be frugal. You don't have to have everything matching day one. Now you might go, oh no, that's the standard we're going to remain at. We've got to hold that standard. I get it, we all have standards, but everything does not have to be brand new. If you bury yourself in debt and you get too far ahead of yourself financially, the climb out of that debt can be insurmountable in some cases. So be careful, be cautious. Parents are looking for a great program with amazing staff, amazing teachers in there, a director and owner with compassion. Be that. Be that. We're going to continue to dive into so many different topics, and I want to continue to give you as many arrows in your quiver as possibly that I can. And so please stay with us, continue to watch our videos. We're going to continue to try to build a program for you and a toolbox of all kinds of things that are going to help you manage your business better. I want to touch on the building behind me real quick before we wrap up this video, and that is partnering with the bank. Make sure you know your banker. Make sure you have personal contact with them. Find someone that wants to build a relationship with you, that's willing to invest their time and effort and resources into your program. Find out, before you even set up those accounts, put $100 in there if you need to. That's all we had when we started. And then apply for a loan, a line of credit, overdraft protection, and make sure that bank is going to be able to lend you money at times when you need it, because that's oftentimes what we need to be able to grow our business. Maybe a commercial revolving line of credit so that you can possibly make payroll in some of those dipping periods. So make sure you've got a good financial partner. And if your bank won't lend you anything, if it has to do with bad credit and so forth, that's something you need to work on. Maybe we can touch on that later. But if you have decent credit and they won't budge or work with you or loan you money, I would look elsewhere. Don't feel like you're stuck in a bank. I was stuck in 2 banks in my mind way early on until I decided I need to shop and find someone that's going to help me grow my business. Alpine Bank was a phenomenal partner for us, and they really changed how we were able to manage cash flow by simply partnering with us through some loans and cash management. It's been a great partnership. So make sure you've got a good financial institution. behind you. All right, ladies and gentlemen, I hope that you got some good tips from this video here about money, about cash flow, about sprinting to profitability. Whether it takes you 3 months, 6 months, 9 months, or a year, you've got to get cash flow positive just as fast as you possibly can, because that's going to help you create that solid foundation to continue to grow and grow and grow. You can always do more. You can always add more to your program. You can always pay your staff more. But at the very beginning, everybody's got a partnership. Everyone has to partner with you. So it's so important that you think about cash flow money right away. Thank you for watching. Make sure you hit the like button, hit the subscribe, and hit the bell for me as well. Follow this channel, follow this journey. We have so many more series that we're going to put into to talk about different parts of your childcare business, making it successful. Let's sprint to profitability. Have a marvelous day. 5 times 6 is 30. That's $3,000. I hope you can't listen to hear that leaf blower in the background.